Good afternoon, everyone, and welcome to the launch of the report of the International Regulatory Strategy Group, fondly known as the IRSG, on the UK regime for overseas firms. My name is Rachel Kent. I'm from Hogan Lovells, and I chair this IRSG workstream. This surely cannot be happening at a better time. What a few weeks we have had, and I'm not even talking about the football, marvellous though that is, of course. It strikes me that something has changed in financial services, and that change is, if you like, now official. As I look back to the referendum, I'm reminded of all the work that the IRSG did to promote a comprehensive and a deep relationship with the EU. Initially, you will recall, a relationship based on mutual access, perhaps not very different to the relationship currently being discussed with Switzerland. We then looked to the significantly less comprehensive possibility of equivalence determinations. But as the Chancellor said in his Mansion House speech last Thursday, that has not happened. So what does this mean for the UK as we look forward? As the Chancellor also said, we now have the freedom to do things differently and better, and we intend to use that fully. He noted, of course, the deep shared values and long history of cooperation with the EU, and we hope that that not only continues, but that it thrives. But he also noted the importance of our relationships with the US, with China, with India and Brazil. And it's clear from our report that openness and attractiveness of our financial services markets continues to be vital. And we will hear about the IRSG's proposals on those things in a moment, and that will be followed by a panel discussion. Before that, though, we have two keynote speakers, not one, but two. And first, I am absolutely personally delighted to welcome Kay Swinburne. This is Kay's debut in her capacity as the chair of the IRSG Council. And given Kay's former role as an MEP, where a little bird told me she was known as Mrs. Mifid, we couldn't be in better hands. We couldn't have a better person to lead us through this period of tumultuous change. So Kay, the very, very warmest of welcomes from me and the entire IRSG community. So please, can I hand over to you to tell us your plans for this role?
Absolutely. Good afternoon, everybody, and thank you, Rachel, for that introduction. And it's my pleasure to join you today at the launch of this latest report by the IRSG, the UK regime for overseas firms. And as Rachel said, it's my first formal IRSG event since taking over as the chair of the council just a couple of weeks ago. So I'm delighted that it's on the subject of regulatory openness. And as a former legislator, I've spent much time thinking about the balances that need to be struck. In particular, balances to enable financial services to serve the economy, to be innovative, to serve customers, to think about international competition, and to preserve financial stability, as well as maintaining competition, to finance common objectives like the race to net zero, and indeed to combat financial crime. These are all important challenges for the industry, and enabling cross-border business to flow is vitally important, including via regulatory mechanisms, all of which involves balancing many of these considerations all at the same time. We know that the UK has successfully managed to balance these objectives over a number of decades, and London has thrived as a leading global financial centre, maintaining the highest international regulatory standards thanks in part to its openness to international firms and the perceived fairness in the ecosystem here. The UK-based financial services industry has innovated and adapted to change, and we are once again at a juncture of change with numerous challenges ahead. So this year, the industry has stepped up and continues to do so, working with governments supporting firms through the COVID crisis. The industry has also put in place the preparations for the end of the transition period to ensure that customers in the UK and the UK could be serviced irrespective of the outcome of the broader political discussions between the EU and the UK. And the FS industry is now focused on one of the biggest challenges to date, the race to achieve net zero and provide the investment to turn the tide on climate change, helping fund the transition to a low carbon economy of the future. We therefore welcome the acknowledgement of the Chancellor last week of the importance of the financial services industry to the UK's global competitiveness. And the IRSG wants to continue to work with government and the regulators to support this new phase of change. And I'm delighted to have the opportunity to lead the IRSG, a body that brings together representatives of the broader financial services industry. The IRSG has published many thought leadership reports, which have provided positive contributions to the thinking of policymakers and regulators in the UK and internationally in recent years. Working closely with the trade associations, the IRSG works to add value to sectoral views and to ensure that policy and regulation takes into account the views of that wider financial services industry. So I'll be taking soundings from members and stakeholders over the next few months, but I'm pleased with what I've heard until now. The IRSG is well regarded and has a strong reputation amongst the UK and international regulatory communities. And as a former MEP, I valued the many contributions to EU financial services policy, and I hope my successors will too. So I want the IRSG to continue to be a critical friend of regulators and policymakers, to encourage governments and regulators to pursue global regulatory coherence and have a robust international framework, as we did with our G7 paper and data fragmentation report in the last few weeks. I want to ensure that the UK's regime is fit for purpose for an international global centre of the 21st century, as we indeed are doing with our work on the UK taxonomy and our regulatory architecture work. And of course, to have a constructive dialogue with international regulators and global standard setters to encourage open markets, data flows, and to protect financial stability. And I see our bilateral dialogues and standing committees as key channels to this end. And of course, to ensure that the IRSG produces relevant work. Following the IRSG submission to the HMT call for evidence on the overseas framework, it is really pleasing to be asked to deliver more thinking in this space. So the report being launched today is part of a suite of reports of the IRSG focused on regulatory competitiveness and ensuring that the UK is attractive to international firms. I'm grateful to Rachel Kent and her team at Hogan Lovells, as well as the wider drafting team, which we'll hear from shortly, from Linklaters, Clifford Chance, and Norton Rose Fulbright, all on a pro bono basis. This is a strong technical piece of work which exemplifies the ethos of the IRSG, a mix of industry perspectives and clear legal explanations as to why the many access regimes are an asset to the UK and the importance of maintaining openness. There are strong messages contained in the report which support broader government objectives, such as the trade promotion agenda. So to be clear, the IRSG does not believe that regulatory competitiveness means a bonfire of regulation, but instead supports a strong, well-managed regulatory regime as an asset to the UK as a global financial centre, proportionate in its application and open to innovation. I hope that you'll find that this is a well-balanced report which has thought about the many competing objectives that we know the regulators and policymakers are thinking about. Rachel's next challenge is to look at the wider regulatory regime and develop recommendations that in a similar vein will identify improvements to the UK's rulebook. Hearing Nikhil Rathi's recent speech at City Week about building a regulatory environment for the future, this work is very timely. While many of those who contribute to the IRSG would not necessarily have wanted the UK to leave the EU or no longer play a role in the single market directly, we are focused on ensuring that irrespective of equivalence or no equivalence, customers in the UK and the EU are supported by our sector, particularly as our economies tackle the multiple challenges of the economic recovery from COVID, and that the UK's regime in particular can continue to evolve, as it has done for hundreds of years, to withstand the next challenges that will inevitably come along. I'm going to conclude by paying particular thanks to the many representatives of firms who take part in the IRSG, the Council, the Board, the committees, the work streams, and the dialogues. Those who give their time to share perspectives on the regulatory questions on the table, the big and the small, and of course to the Secretariat from the City of London Corporation and the City UK, who work tirelessly behind the scenes to help in all of these matters. It is with huge thanks to all of you that the reputation of the IRSG is strong and well regarded. And as the new chair of the IRSG, I hope that you and your firms will continue to engage in our work and provide regulatory solutions to the challenges of today and tomorrow. Thank you, Rachel.
Thank you, Kay. I absolutely reiterate your thanks to the Secretariat and the team, particularly Sarah Murray, without whom I definitely wouldn't be here doing this. It strikes me that we're going to be very busy. You're going to be very busy, Kay, and I think that if we can help you at all, do pick up the phone, and we certainly wish you all the best with that. But now we move on to hear from somebody, admittedly not quite live, and he will explain why himself. But that somebody has been a staunch supporter of our sector, a man whose door is always open and who is always willing to listen to the views of our industry. I mean, of course, the Economic Secretary to the Treasury for the last 3 years, John Glen.
Thank you very much for that introduction, Rachel, and thank you for the invitation to speak to you today. I have to apologise that I have to pre-record this on Wednesday due to the fact that I have to respond to a debate in Westminster Hall. I didn't know that when I accepted the kind invitation. But my colleague Richard Knox will be attending the panel afterwards, and I know he's very well equipped to answer your questions. But allow me firstly to congratulate the IRSG for the work that you do, including the publication of your latest report. As a government, we know from experience that our policies are always enhanced by conversations with industry organisations, and your voice is a very influential one in that conversation. Now, the report sets out a number of helpful options that the UK could avail itself of to remove perceived barriers to overseas firms and make its approach to market access clearer and more coherent. And we have noted the recommendations included in the report, in particular that the UK regulatory perimeter is not as clear as it could be. But today, I want to briefly set out my thoughts on the government's recent call for evidence on the overseas framework and the next steps. But before I do that, I would like to reflect on the Chancellor's announcements in his Mansion House speech delivered last Thursday morning and our vision for the future of financial services. As many of you will know, that vision is based on 4 key themes, 4 simple things that we want the UK financial services sector to be. First, an open and global hub. Second, a sector which is at the forefront of technology and innovation. Third, the best place in the world for green and sustainable investment. And finally, a competitive marketplace promoting effective use of capital. As a global centre of finance, we are confident international advocates for openness and competition. And we will use our strengths as a global financial hub to establish and enhance the strong relationships that we have with jurisdictions all around the world. To deliver this vision, the government has already taken a number of steps, including granting a package of equivalence decisions for the EEA countries, securing an ambitious new financial services partnership with Singapore, and establishing the US, UK Financial Regulatory Working Group as a comprehensive senior level dialogue between the world's two leading global financial centres. And we're also working to cement the UK's reputation as a global hub for fintech, and have passed the Financial Services Act 2021, which is a first step in amending the UK's regulatory regime to better suit the specifics of UK markers. If you heard or read the Chancellor's speech last week, you'll also know that there's still plenty to do on the to-do list. We're working towards an outcome-based mutual recognition agreement with Switzerland and want to deliver further equivalence decisions with overseas jurisdictions where it is in the UK's interests. We'll also be championing efficient and competitive markets by reviewing the UK's wholesale capital markets regime, ensuring the UK's prospectus regime is fit for purpose by consulting on relevant reforms, and enhancing the attractiveness of the UK for asset management through a review of the funds regime. On regulation, meanwhile, we'll be using the Future Regulatory Framework Review to deliver changes to the Financial Services Regulatory Framework, which reflect and respond to the specific needs of UK markets. We also want to reform the prudential regulatory regime for insurance firms. So there's a lot to digest there, and I could happily spend hours talking you through it. But I'll focus instead on something I know is of specific interest, the call for evidence on our overseas framework. Like the IRSG itself, we believe that open markets are vital to support economic growth, and we want to continue to support the UK's position as a global financial centre by ensuring that the regulation which underpins it is the best it can be, by championing high standards and effective regulation. And the framework that governs how overseas firms operate in the UK has developed over a long time through a patchwork of EU and domestic legislation and rules. And this has resulted in a complex framework that can be difficult for firms to navigate. Leaving the European Union has provided an important opportunity to look at that framework and the regimes within it, and to renew the UK's position as the world's preeminent financial centre. Now, the framework as a whole should be predictable, transparent, and safe. It should attract liquidity and activity to the UK while supporting financial stability and upholding our principle of openness in financial markets. And the purpose of the call for evidence, launched at the end of last year, is to better understand how our current overseas framework supports our position as a global financial centre. And I want to thank the IRSG and the dozens of other respondents for taking the time to submit considered responses. And what's clear from the call for evidence is that the UK's regulatory regime is a valuable asset, which, by and large, respondents don't feel is in need of fundamental reform. And as you'd expect, however, there was also constructive feedback on specific aspects of the framework. On the subject of the UK's overseas perimeter, for instance, respondents noted that in many places the current guidance overlaps, and that the presentation of information in the guidance is sometimes incomplete and difficult to find. Some of the responses recommended that the government should take this opportunity to make its approach to access to its market clearer and more coherent, and consider whether the current balance of the overseas regulatory perimeter is still in the right place. However, information gaps still remain despite the responses to the call for evidence, and in particular around how firms use the OPE and how this may impact the resilience and safety of UK financial markets. So I'm pleased to announce that the government will shortly be publishing our response to the call for evidence, setting out those next steps. And in light of the responses to the call for evidence, the government is committing to working closely with the Financial Conduct Authority and the Prudential Regulatory Authority to conduct a review of the overseas regulatory perimeter. And this review will seek to identify three things: whether the balance of the overseas perimeter remains appropriate for the UK following our exit from the EU and for ensuring resilient and safe financial markets, whether there are elements of the overseas regulatory perimeter that need updating to reflect modern working patterns and advancement in technology, such as the in the UK test, and whether there are areas of the overseas perimeter that could be clarified to give greater transparency and clarity to firms. So following this review, the government will initiate consultation on potential changes to the UK's regime in Q4 of this year. We're particularly keen to consult on potential changes to the overseas regulatory perimeter, including those which could make it more coherent and easy to navigate. And we will also consider changes to the overseas persons exclusion, including the option to remove the overlap between the OPE and equivalence provisions under MiFIR. Another question is whether the current operation of the regime appropriately balances openness while mitigating risks to the resilience and safety of financial markets, the protection of consumers and market integrity, and the promotion of competition. And finally, we want to understand whether further regulatory powers are needed for the ROIE and OPE to address any deficiencies in regulatory oversight, and to hear views on options for amendments to the financial promotions order exemptions relating to insurance distribution with that overseas element. I appreciate that must feel like I'm asking you to do a lot more homework moments after you've handed in your last assignment. But as I said earlier, the policies we design are always better when they are in part shaped by the industry itself. So please, when the time comes, let us know what you think. The point is that we want the best for the sector, because a thriving UK financial services industry means a thriving United Kingdom. In our mind, that means a sector which is open, technologically advanced, innovative, green, and competitive, and which is, yes, world leading when it comes to regulation. So thank you again for listening to me, and thank you for all the work that you do. It's greatly appreciated.
We will pass our, excuse me, we will pass our thanks on to John. And I would say, actually, I think I heard him say that he was happy to spend a couple of hours with us going through all the other aspects. So I think that might be something to take him up on. But we do indeed want a market that is open, technologically advanced, innovative, green and competitive, and absolutely, yes, world leading when it comes to regulation. And now, talking about world leading, we now come on to hear from the experts, the people who did the heavy lifting in relation to the report. And we're going to hear from them across the 4 key areas that we identified for potential improvement. They are the perimeter, the overseas person exclusion, the regime for the authorisation of branches, and for the UK's own equivalence regime. So welcome to my very own Dominic Hill from Hogan Lovells, to Diego Balanosio from Clifford Chance, and to Jonathan Herbst from Norton Rose Fulbright. Dominic, can you kick us off with the perimeter issues, please?
Yes, indeed, thank you. So yes, I will just start with a few words about the regulatory perimeter. As each of the teams produced their sections of the report, they all came back to the same point, which was that we could actually do with some additional clarity around the UK's regulatory perimeter. And obviously, if you're an overseas firm who's looking to do business with customers or counterparties in the UK, the first question you should be asking is, am I doing any activities that require a UK license? And the answer to that is not as obvious as you would think. So, for example, one of the criteria for needing a license is whether you're doing the activity in the UK, and it's not always clear when that is the case. So, for example, if I was a bank in Australia and I open up a deposit account for a UK-based customer, am I doing that activity in the UK or Australia or both? And in the UK, there isn't always guidance from the regulators or the courts, and the answer can actually differ from activity to activity. And all of this makes the position clear for incoming firms. Our starting point, therefore, is that if the UK is going to review its rules for overseas firms, it should be taking this opportunity to clear up those aspects of the perimeter that are unclear. And the good news is, as you just heard from John Glen, there is a willingness to do that. On a related point, even if an overseas person doesn't need a license, we also have restrictions in the UK on issuing financial promotions, and this can also act as a barrier. So we're therefore suggesting that the extent and limits of the financial promotion restriction be looked at as well. And all of that is before we get on to considering some of the more detailed proposals regarding access regimes. And so for the first of those, I'll hand over to Diego.
Thank you very much, Dom. I think the success of an international financial center rests on frictionless trading. And the overseas persons exclusion and the exemption for recognized overseas investment exchanges are key contributors to such frictionless trading in the UK, because they enable sophisticated UK firms, and by that I mean large corporates, brokers, institutional investors, to access foreign trading venues and to deal with international counterparties with legal certainty that no licensing requirements are being breached as part of that transaction. The great thing about them, about these exemptions and exclusions, is that they do this while simultaneously protecting UK retail investors from being exposed to unauthorized business. So in the UK, we have a regime which is open to wholesale trading activities, but is at the same time protective of consumers. And internationally, these regimes stand out because they provide that certainty that other jurisdictions don't have. Other jurisdictions rely on reverse solicitation or similar measures that may not be as accurate in the UK regime as the UK regime in the context of cross-border access. Now, our report recognizes this, of course. However, as with everything in life, nothing is perfect, and our regimes are no exception. We have identified a few areas where our cross-border access regimes can be rationalized and potentially improved. I'm picking out two examples. There are existing limitations brought about in part by EU legislation that disapply the OPE for financial market infrastructure providers such as CCPs and CSDs in certain circumstances. And that obviously creates some friction in terms of accessing these overseas infrastructure providers. When we're talking about the other sort of side of the range, when we're talking about consumers, I said that it's protective, but sometimes it's a little bit overprotective of UK consumers. So for example, at the moment, I think in the example that Dominic made, there is a possibility to have, deposits at a foreign bank, but any credit that such bank may provide may trigger licensing requirements and would therefore make it hard for UK-based persons to maintain that account or to benefit from all the benefits of a foreign account. So overall, I think what the regime does is it recognizes that cross-border access measures are an incredible tool that contributed to the city's position as a global financial center for more than 30 years. However, there is scope to improve them, and any such improvement should not create friction, at least in the wholesale trading market, which is already there. And with that, I'll pass on to Jonathan.
Thanks, Diego. So we also looked at the position of branches, both under the FCA and the PRA regime. And essentially, we welcome the risk-based and case-by-case approach that the UK broadly takes, but we made four main recommendations. The first one is a clearer division of responsibilities between home and host, and a clearer framework in relation to deference in particular, and a couple of sub-points to that: clarity on both prudential and conduct aspects, and also minimizing duplication and overlapping. So that's number one. Number two, more clarity on the process that UK regulators should go through when they are authorising a particular branch, and in particular their assessment of home state regimes. And we called for two things in that context. Firstly, that should be set out more clearly in secondary legislation, and secondly, that it should be guided by international standards. Thirdly, a change to the so-called have regard to factors under the Act to include the attractiveness of the UK as an inward investment location. And there were a couple of sub-aspects of that, both that linking that to the supervisory activities of the regulators, and also some recognition that there may need to be some sub-aspects, for example, to deal with cases like depositor protection, depositor preference. Finally, simplifying the navigability of the rule books and the handbooks. This is actually very important practically. And there were really two aspects to this. The first was clarity in relation to exactly what applies to branches. Surprisingly, in some ways, it's not that clear in some cases. And the second is more clarity in relation to territorial scope of application of the rules. So for example, whilst in relation to conduct of business, there is the so-called foreign business carve-out in COBS, in many other aspects of the FCA and PRA rulebook handbook as appropriate, is not actually that clear in some cases. So those were the four main proposals. Back to you, Dom.
Thanks very much, Jonathan. And so the final question we looked at was equivalence-based regimes. And by that we mean allowing an overseas person to have access to the UK on the basis that the regulatory rules in their home country are equivalent to those of the UK in the relevant area. And that as a concept is the kind of thing that could be used as the basis for developing future relationships with third countries in relation to financial services. And you heard John Glen give some specific examples of how that approach is being used in practice right now. But if we do take this approach, what does equivalence actually mean? Well, we do have equivalence as part of current UK law. The EU allows equivalence-based access in a few limited contexts, and we copied those provisions into our law. However, as we've found, the EU idea of equivalence is very rigid. It essentially means being exactly the same as the EU's rules. And in our report, we are basically not in favour of that kind of equivalence. And in fact, one of our other recommendations is to remove some of the EU provisions because they're getting in the way of the overseas person exclusion. What we're saying is that if equivalence is to be the basis for market access, it should follow a genuinely outcomes-based approach, which focuses on delivering comparable outcomes rather than being the same. And we were glad to note that when the Treasury published their own guidance on equivalence at the end of last year, they take a similar view on that question. We also think that the UK's approach should be consistent with global standards where they exist and provided that that is appropriate for the UK market. There's also a question mark over whether equivalence-based access should be on a reciprocal basis only. And in our view, that should not necessarily be the case. It might be appropriate to allow it on a one-way basis. Nevertheless, each case for extending access ought to be looked at on its own merits. And the final point to bear in mind is if the UK is going to have equivalence-based access, we need to think about how it interacts with the other access mechanisms like those we've just discussed. And we're therefore also suggesting that the UK equivalence framework should be reviewed in 3 years as part of a wider review of access and competitiveness.
Thank you, team. Thank you for that very helpful run through. Thank you for all the work that you put into the report, and indeed thank you for being able, like all good lawyers, to make sound simple that which is actually incredibly technical and complex, and indeed that's one of the challenges that we've been talking about. I know that you would all want me to extend thanks to all the participants who provided input into the report, both looking backwards and hoping that they will continue to provide their input as we move into the next phase, which we will hear more about in a moment. I'm reminded that John described the consultation paper, so we're waiting for the consultation paper, and he described that as asking you to do more homework just after you've handed in your last assignment. So it definitely occurs to me that he's giving you a message that your work here is definitely not done. So watch this space. But now we come on to our panel. They need no introduction. They are Katherine Griffiths, banking editor of The Times, Michael Kent, a man at the beating heart of regulation at Linklaters, Richard Knox, Director of Financial Services International, and a man, if you like, at the beating heart of policy in that area at the Treasury. And also we are joined by Lord Holmes of Richmond, another staunch supporter of our sector and a putter-downer, if that's a right term, of many amendments to the Financial Services Act, including, of course, the all-important cashback without purchase. So welcome indeed to all of you. Can I just remind you at this point to put any questions you have in the chat box, and we'll see if we can pick those up as we go along where relevant, but if not, we'll hopefully have some time to visit those at the end. So please do put some questions in. So we're going to look at the UK's position, I guess, across three key themes. UK attractiveness, so what makes the UK a good place to do business? Secondly, the multiplicity of access regimes that we just heard a bit about, and in particular how they fit with the levers the UK has, if you like, in relation to bilateral agreements. And finally, a look forward to the next stage of the IRSG work, the competitiveness. So what are the priorities for the evolution of our regulatory regime? So first, for UK attractiveness. So I guess the question here is just how attractive are we? So Katherine, can I come to you first? The Chancellor's speech last week that many of us have referred to set out a very clear vision for financial services and the next steps for boosting the global competitiveness of the UK. So my question for you is, how significant is this speech in terms of resetting the position of financial services at the very heart of government strategy?
Hi, Rachel. I think it really is quite significant. I'd say perhaps the watching world would feel quite sceptical, perhaps, about rhetoric going this way or that way in the wake of Brexit. But I think people are beginning to think, actually, yes, really, the city and financial services is forming quite a big part of the government's agenda. And I think people perhaps felt not only were the words very warm, but also actually as an indicator, the fact that we're now seeing really quite a lot of sort of detailed consultations and sort of early thinking from the government, which sort of suggests that all important and precious kind of government time actually this is forming quite a big part of it. And in thinking about this, I'd invite us all to perhaps think back to those days before the referendum, to sort of properly understand the shift. And I certainly remember writing about this sector that one would hear from sort of very senior executives about how it would be terribly awful if we voted to leave the EU, and indeed how terribly awful it actually was after the vote. But no one could really, people in the industry struggled with how to sort of formulate that position publicly. They were worried about being seen to be doing special pleading, and indeed the government didn't want to go anywhere near it. So it really is a very significant shift, I would say.
Thank you, Katherine. Richard, coming on to you, but again referencing the Chancellor's speech of last week, he referred to the sovereign approach. Can you tell us a bit about the sovereign approach and what it indicates for firms in terms of the direction of policy? What does that really mean?
Yeah, thanks, Rachel. I will come to that, but I would just like to take this opportunity to thank you and everyone who's just spoken for all the work you've done on this report. And I think I would just echo what the Economic Secretary said, that I mean, it's not easy making policy in this area, but a really vital ingredient is getting really good, high quality, thoughtful input of the kind that you provided. So that's hugely welcome, and just a vital part of what we do. So on the overall approach, I mean, I would say amongst the things that the Chancellor talked about, it's probably best illustrated by a couple of examples. I mean, the wholesale markets review is something we work really closely with the FCA on, but also we had a lot of discussions with the industry, and it's about practical ways in the immediate term after we leave the EU of just making these markets work better, be safer, be more attractive, and function effectively, but without introducing costly change for change's sake. And then another example is that the arrangement we're trying to negotiate with the Swiss, which is genuinely attempting to be a completely new way of developing a relationship with a trusted, well-developed, sophisticated financial centre, which really sort of pushes the boundary of what two sovereign jurisdictions can do. So I suppose the theme that across those, which hopefully helps to answer your question, is it's about high standards of regulation, because we genuinely view soundly regulated markets as a pull factor for the UK and a key part of our competitiveness. But it's also what is needed for the sector to be effective, practical ways of ensuring that our sector continues to operate as a very dynamic sector changes over time. And I suppose that the final point I'd make is, it's not just about regulation. I think that hopefully came through very clearly in what the Chancellor said. We completely understand that access to the best talent from around the world is a vital part of what makes the UK and London what it is, and obviously the fiscal regime as well. So the whole thing comes as a package.
Thank you, Richard. And indeed, I note the theme of this is not deregulation and poorer standards. And I remind everybody that, again, the Chancellor said there was absolutely no intention, and we would not be giving the EU cause to ever say that we are not equivalent by reason of poorer standards. So I think that's echoed by everybody. Thank you. Michael, can I come on to you? As you know, as the group investigated the various different access regimes, it became quite apparent that there was a lot of overlapping areas, scope overlapped. And I think that was also clear from what Glen said. I think he described it as a patchwork. Can you tell us about that patchwork, and do you think that is causing confusion? Being somebody who advises clients on this issue and how they get into the UK all the time.
Yes, I agree. I mean, I think it's a good description. It is a patchwork, and bits of it are really quite clear and work well, but surrounded by other bits that are less clear. So it's creates some complexity. I think the thing I'd want to emphasise, just building on the comments from earlier, around the overseas persons exemption, that would be a piece of this patchwork that is relatively clear, particularly as it works in the wholesale markets. And in terms of my experience of advising on it, I believe it's really quite a critical part of what has underpinned London's success as a wholesale market. So whilst I'm very pleased to hear about the potential bringing you extra clarity, I have to say I get a little nervous that we could see some change to something that works well. Let me say, I think it's three principal things that it does. We've mentioned one of these already, that it definitely, it doesn't put barriers in the way of liquidity, or put it another way, it therefore encourages liquidity. People don't have to worry about trading wholesale into the UK with a counterparty. You haven't got that comfort in most other jurisdictions. That's point one. Secondly, it's in practice an important aspect of openness. If you're thinking about doing business with a UK customer and you're not here and you're focused on wholesale, you can get relatively clear advice that you don't need a license here. Now, that's helpful. So that appears open, which it is. But its effect is, as that business might be successful, it becomes a magnet because people want to be close to their customers. So once you've established a good customer base, perhaps by reliance on the overseas persons exemption, many people then in due course open up here and get a license. So anything you do that restricts the overseas person's exemption, I think could undermine that healthy process. And the final point I'd make on it, which differentiates it from nearly everything else you come across in other jurisdictions, is that it's genuinely an exemption. It isn't a limited license with lots of conditions attached to it. You don't have to comply with conduct rules. So slightly analogous things in Holland and Germany, which are somewhat, actually have conditions attached. You have to comply with the local rules if you get, they're in the nature of a limited license. This is an exemption. That's a critical feature of it. So I would be I would hope that in the review, we don't undermine any of those key ingredients whilst doing some good around dealing more clarification on the patchwork.
Thank you. I think that's an excellent point you make, that it facilitates people coming in, if you like, to put test the water and put their foot in the door and see how it's going, and when it goes well, moving on to full authorization. So very valuable in that sense. I'm also reminded that somebody asked me yesterday when the OPE came into force, and I think I'm happy to report that it predates even my arrival in the city. And I suppose certainly it was in place before the harmonisation directives in relation to financial services. So part of me is surprised that it survived all of that, but I'm very happy that it did, and it's come out at the other end. And if anything, we can polish it off and improve it further. So thank you. Okay, coming on to the second theme. So given the multiplicity of access regimes and the potential for improvement we've just heard about, and given the arrangements available to the UK in relation to bilateral relationships, let's come on to have a think about this. So Lord H, if I can come to you at this point. As you know, the IRSG's core purpose is to advocate for an international framework that facilitates open and competitive global capital markets. That's what we are here for. So with this focus on openness alongside the proposed agreements with other international allies, do you think that this will provide the confidence to international firms to come here and invest in the UK?
Thank you, Rachel, and pleasure to be here. And good afternoon to everybody. And can I also add my support to the report and congratulate all those involved in its production. It's an important piece of work and very well put together. I hope that the openness and everything that's been said around it does bring that confidence. It ought to, and indeed it needs to. It makes sense to push this openness agenda at a philosophical, at an elemental, at a micro, at a macroeconomic, at a societal level. It just makes sense, and particularly when we look at that in a global context of populism, protectionism, and so much of the rhetoric of retreatism, it makes sense. It should give international firms confidence, and without question, it is a competitive edge for the UK. I think if we look at the stuff around bilaterals, tick, I think Dom put it perfectly on the point around equivalence. Equivalence must mean equivalence. It does not mean capital T the same. Ditto, I think the stuff around deference is very interesting. And when it comes to having that openness thread through the regulation, as you rightly say, regulation must be right-sized. It's not about ripping it up, it's about it being right-sized. And it's also about Parliament having the right oversight. If this thing was about anything, we were constantly told it was about the repatriation of powers to Parliament. Well, so be it. The parliamentary dog at least needs to see the right level of the regulatory rabbit. I think there's a great potential for innovation here. RegTech obviously can play a big part. What my colleague Jonathan Hill did on the listing rules really speaks to that openness point as well. And then I think there's so much, obviously, in the recently published Khalifa review, which I'm sure all participants on the call know, the chapter on regulation and governance, excellently co-piloted by Kay and yourself, and much in there. So I think people should be excited by this. Regulation isn't fusty. Regulation can be a key enabler of the economy we need and the society that we want.
Thank you very much for that. And I absolutely love your euphemism of this thing to avoid using the B word. So thank you very much for that. I didn't even have to tell you that was a rule. Some inspiring thoughts there. And I'm going to come back to you in a moment if I may. But first of all, Richard, can I come back to you? Following on from the call for evidence on the overseas framework, can we look forward a bit? We heard from the Minister a moment ago. What might be the next avenues that HMT is looking at in relation to creating more openness for cross-border business?
Yeah. So it's a really important question, and obviously, you know, I don't think there should now be any doubt that we have a policy focus on openness. But then the question is, well, how do you give effect to that? And I think the answer is that, well, a very positive answer, in that we have lots of things in our toolbox that are available to us to give effect to that. But there's some complexity to it. And I think, as I'll go on to try and illustrate, that there won't be a single answer which is appropriate that spans different parts of the sector. And there won't be a single answer that's appropriate for different partner jurisdictions around the world. So for example, looking at equivalence, I mean, we've brought onshore, I think it's 270 or so existing equivalence arrangements for the rest of the world. It was great that in February we were able to recreate the important links with the Swiss on share trading, for example. And we're also looking, and have already started to look at, where there might be new opportunities for equivalence type arrangements. So for example, we've now created an overseas funds regime, which is effectively an equivalence arrangement, which will allow us to use that to build bilateral relationships with other sectors, with other jurisdictions around the world. And I think I heard some support from contributions earlier that, you know, we've shown that our approach to equivalence and the way we've articulated it is not the same as the EU's apparent approach. We are very focused on it being outcomes based and predictable and transparent. But alongside that, obviously, we have, you know, we've got other tools. I talked earlier about the work we're doing with the Swiss, which I think is a really important way of thinking about how we can, you know, really push the envelope about the way these a broader mutual recognition arrangement could work, that it could span a range of wholesale activity. We have very well developed dialogues now with the US, Singapore, Japan, and we're looking to build one with Australia through our FTA process, which again is another opportunity to build relationships regulator to regulator. And after all, that's a lot of the way this is going to end up being done. And free trade agreements themselves, they don't often provide much access, but there's opportunity to do that. But they do, of course, provide a platform for deeper regulatory cooperation in the future. And then, I mean, the final angle to this is that's primarily a conversation about more advanced developed jurisdictions. We also have our Chancellor-led economic and financial dialogue processes with China, India, and Brazil, and those tend to be very fruitful arrangements where we can talk about what ways in which there are particular barriers that we can then tackle. So there's a huge amount of scope. And you know, I haven't mentioned all the jurisdictions that we can think about, but I suppose my basic point would be, as I say, it's not one size fits all, either by subsector, either by part of the sector, or by jurisdiction.
Thank you. And I feel obliged to say that, as you may recall, the IRSG is very fond of mutual recognition. So we await, in particular, the arrangements with Switzerland to become clearer as you move through those. So thank you. Katherine, can I just come back to you? Same question as before, in a way. Richard just mentioned Switzerland, for example. We also have the agreement with Singapore, with Australia, Japan, and as I say, Richard mentioned other things. There's quite a long and indeed growing list. Can you give us your thoughts about how those things are being greeted by the industry?
Yes, I mean, I think they're being greeted as very positive developments and signs. I suppose people are keen to know what does it all add up to. I read a pretty sort of challenging, actually, piece of commentary in another newspaper over the weekend on which touched on this and described the various different agreements as a bit of a ragtag or something like that, which is obviously not very complimentary. I think the point was that they're important and they're great, but of course, what really the city would like is equivalence ultimately, and hopefully it will come in some way, shape or form. But the city certainly sees lots of other positive signs. There are listings that have taken place recently. The Wise direct listing, fantastic news. The Khalifa work, the Lord Hill work, it's all extremely positive. I suppose one might slightly sour the picture by saying, well, look at Jamie Dimon being wined and dined and sort of greeted in Paris, not fantastic. But then perhaps we need to remember that actually at the same time, JP Morgan is creating a digital bank here in the UK, employing hundreds of people. So the signs look positive.
Absolutely, certainly for the challenger bank model, I agree. I might take slight issue on the equivalence piece in the sense of, I'm not saying people don't want equivalence, but to go back to the Chancellor's words about doing things differently and better, I think we'd all agree that we wouldn't start here and have equivalence if we had a choice. So I personally put in a vote for something different and better, but let's see where we get to. But thank you for that. Okay, just as we bring this to a close, looking forward to the evolution of our regime. So the next piece of work for this work stream, as people have referred to a few times already, is looking at the way that firms are, if you like, treated when they get here. So Michael, if I can just ask you to comment on this. So looking backwards, we've looked at how firms do get here, looking forwards as to how we treat firms when they are here and the rules that apply to them. That's what we're going to look at. Can you talk to us about some priorities that we might consider from your perspective?
I mean, yes, clearly the short-term priority is to get the wholesale market review right. So us all engaging on that and getting that, because that's that would picking off the high priority issues. Other areas which may or may not be covered by that, but would be additive, I think. I think actually it's the authorization process and speed. If you think in competitiveness, many firms are still now with their Brexit contingency planning after the event, trying to get licenses in really slow countries. It's a big turnoff, and it'd be great if we could be known as one where you could get a license here quicker than nearly anybody else for a reputable firm. That would be one thing. I think we could look at resourcing. That's really resourcing and focus. Remuneration and tax, kind of slightly off this narrow agenda, but clearly very highly relevant to London's global competitiveness. I'd say slightly more micro baggage we've inherited: regulatory report, transaction reporting, regulatory reporting. I really look cost benefit analysis on the amount of work some of this stuff is entailed. I think that's a natural adjunct, maybe covered with the wholesale review, but focus on removing unnecessary burdens, particularly where they're costly. Yeah,
cost benefit analysis, absolutely vital. Lord H, if I can pass to you, maybe for some closing thoughts and thinking about new frontiers, and especially the regulatory framework around tech, Khalifa and so on, and sustainability. What do you think the IRSG should focus on to improve competitiveness?
I think HMT have a really significant, the most important perhaps question to answer, and that is, what kind of economy do we want? What kind of economy do we need? And when we have that, I think there are some great picks to be made, and largely a number of them sit around new technologies. Then the right size regulatory framework can be consulted and put in place, and all of the great standards work can go to town. Regulation and standards both delivering competitive edge to the UK. AI, obviously a huge part of that. In the FS bill, I put an amendment down suggesting that FS firms should have a AI responsible officer. It's a thought, but I think a number of issues around AI, around distributed ledger technology need to be thought about. See what's happening with CBDC, incredibly important. And crypto, probably I still believe cryptocurrency, crypto assets are the less interesting part of what DLT can do, but there's certainly more than a flash in a pan. And we saw that a key tipping point, I think, with Coinbase going to market at 76 billion. If that's a flash in the pan, it's a very big flash in a pretty large pan. So there's a lot that we need to consider around that, and we should go about it in a rationally optimistic fashion. You saw just today Circle are putting together a 4.5 billion float. That's going to be in New York. Well, as the Hill Review said, we need to get more of these floats happening in the UK and have a much greater understanding and open, again, rationally optimistic, open approach to everything around crypto. ESG, a huge area for the UK. We have such potential there. And if we think about net zero, so many issues, but largely it's underpinned and can be driven in a really positive way by finance and financial services. Finally, there's a lot we can't know about the future. There's a lot we do know. And the most important thing that we know about the future is it's in our hands. It's in all of our COVID clean, well-washed hands. It's up to us. We should be positive about what we can achieve as the UK FS leading a vibrant new technology-led economy.
Thank you. Very positive, but I feel a bit exhausted. But look forward to working with you on many of those things. Can I just say we've had a question, and I'm not sure the question can be answered at this stage, so I'm simply going to read it to Richard and ask him to note it. And the point is, why not drop the idea of equivalence altogether and make exclusion orders for classes of foreign providers of financial services by type and location? I love that idea. So consider that fed in. Can I just say thank you very much to all our panelists, to Katherine, to Michael, to Richard, to Lord H. Thank you very much for joining us today. I'm now going to say to Kay that, again, we're delighted to be the first report launched under your leadership. We hope we have done you proud so far, and we will look forward to working with you on the competitiveness agenda. Would you like to say a few words to see us home?
Thank you, Rachel, and thank you, a huge thank you to you and your team for authoring this report and the future work that's going on, and indeed to the EST John Glen for his intervention and our panelists, as you said. A huge thanks to the team for organising this event as well, and you as an audience for participating. I look forward to future events and sharing the IRSG thinking as we keep working on these important themes and assisting the UK's financial services competitiveness, and indeed making sure we stay relevant over time. So enjoy the rest of the day, and hopefully we'll see you at our next event. Thank you all very much. Bye.
Thank you. Bye.